right. Welcome, everybody. 4:30. What a day. What a year. What a month. What a time to be a trader. Um, Hopefully, we got sound. And this is generally speaking for those that won't be in attendance today. We record these, number one, so they're good to review. Number two, later it will be posted on the website. Darren, thank you very much. Bonnie, hello. And everyone, welcome. And for those that will be listening later, I hope that you find the information helpful. We got a question that it just struck out, and the individual showed up early, and the individual asked the question, and so we're going to answer it. With that said, before we begin, as always, trading involves risk of loss. Please take a moment to read over that risk disclosure that the SEC, which does a fine job of monitoring our markets. No insider trading ever. There's no funny business between the Wall Street Journal putting out weird articles, right, that causes the market to go all over the place, and then they turn out to be not true. But that's okay. The SEC, I'm sure, is looking into that, right? Other than that, they require me to provide this risk disclosure. I'm in a good mood, so I'm going to be a little punchy and a little jocularity. So we'll get through today's session. Anyway, it is Thanksgiving week, and at the very least, I want to say to give our thanks to our clients. We work diligently hard here to provide good research and information and put us on the right side of what we call just the craziest industry ever. This is not an industry and a business that we get pats on the back. We get positive P&L or we don't, and that's it. So we have to learn and to give ourselves an edge. And I think through the years, that's why we've developed a lot of just a few indicators. And I did have a phone call. I talked to a lot of people reached out to me this week. And for a couple reasons. A, to wish me a Thanksgiving, and some of these are clients that have become friends of the family. And one individual says, "Hey, you got a seminar coming up. Do you have a new indicator or anything new?" And I said, the funny thing is, no, I don't. I don't have anything new. Because all of the stuff if I had a new indicator, you think about this, people that create indicators, it's like, why would you create a new indicator if your other indicators worked, right? You don't need another indicator, right? I think that's the key. And with that, it's a great segue to introduce the question, which was, hey, John, what about the settings on person's pivot, please? And I like that word, please, and how to use them correctly. So that's a seminar in itself, but we'll try to get through as much as we can. There's several platforms that use person's pivots. And the first guy that ever came up to me and said, "Hey, I want your work on our software," was Glenn Larson with Genesis Trade Navigator. So I am during this week, thankful because Glenn was the one that actually, and that said, "Hey, we want your stuff on our software." I had written an article for Futures Magazine, and I was asked at the time, I was asked, and I was giving a presentation to the Chicago Board of Trade, and someone said, the other guy that was on this panel was from Futures Magazine. Daryl Jobman was his name, and he was like the technical analysis trading police of the industry. If you were full of nonsense, he knew, all right? And Ginger Salza, and I just wanted to, and I never pronounced her name correctly. I think it was Salzla, and a Ginger. And these were people that it's in a magazine that was like Futures Magazine was the bomb. It was the industry standard by all standard, next to Technical Analysis of Stock and Commodity Magazine. Anyway, I'm just giving you a little bit of history here because I came up with an article back in 2001 combining pivots and cycles, right? Pivots and cycles, because I was always doing my person's pivots. I never revealed at that time what the person's pivot was about and what made it work. We did provide that information later, as Daryl Jobman says, "Hey, you should write a book." I know this lady over at John Wiley and Sons who happened to be a lady by the name of Pan Van Giesen, who now I think is second in charge at Wiley and Sons. She was the editor for Larry McMillan, John Murphy, Victor Niederhofer, if that name rings a bell to anyone. I think she also did Perry Kaufman's books. And Perry is considered the godfather of strategies. And anyway, so I was in good company. And next thing you know, I'm sitting here 25, 30 years later, talking to you guys about Person's pivots. So I don't have any new indicators. I just have a good set of indicators that I use in conjunction with each other. One of the things that just in case someone was like, well, John, do you really use your work? And the first thing is this is a weekly newsletter. Many of you are familiar with if you read it. Okay, I cheated this week. Generally, I give a little bit more about what's going on in the world and last week, right? Uh, but what I do in this newsletter is very not unique. It's consistent. And what I do is I have a checklist. I look at the 4 top stock indices. I give where they close. So in order to figure out where a market might go, you got to figure out where the market's been. So there's your close. If you notice, I give the weekly support and resistance for all of the indices. I give monthly support and resistance and quarterly support and resistance. Where does all that come from? Right here, Person's pivots analysis. So it's interesting if you scroll down, or I'll scroll down and you can read, coming into this week, as of the close Friday, 11/18, the weekly PPS indicator, and that's another subject, was in a buy mode for all indices. And again, here's the key word, thanks to Darren. Tell us about the Person's pivots and how to use them. The weekly Person's pivot indicator remains bullish for all indices. However, the SPY is targeting a mild higher price range coinciding near quarterly pivot resistance. Quarterly is like 407 and the weekly is 408. Pretty close for government work, I'm sure you would agree. So I use the Person's pivot analysis in my work every single week. And if you go back about a month and a half ago, the Dow Jones Industrial Average at the bottom, which I didn't ignore, but I was flabbergasted because traditionally the Dow Jones Industrial Average does not lead the market higher. And in this particular case, the Dow did. And the weekly Person's pivots. So, Darren, this one's for you, kid. Hopefully you're younger than 40, because then kid is an inappropriate word. If we go back and you take a look at, and I'm just going to go through this with you guys briefly about Person's pivots, and then I'm going to use Thinkorswim to share with you the difference. All right. So if you notice, there's 4 colors. There's red, there's gold, there's blue, and there's green. And if I go back and as you know, I just pulled the charts to the left, and that means whatever to the right is futuristic. So pretty much right now, let's pretend. So we're going to start here. Let's pretend today's Friday. If today was Friday, it would be telling us for next week, the market condition is mildly bullish. Why? Well, today, first off, is not Friday. It's Tuesday. So we got Wednesday, Thursday's Thanksgiving, Friday's a quasi half day. Markets close at 1 o'clock, but it's still a Friday. Now, if we close at this high or higher, we can make understanding that the high-low close relationship, the range is in for the week. If that's true, then the Person's weekly pivot is projecting a higher red and a higher green, but more importantly, that blue line, which is the actual pivot point, high-low close divided by 3, it is above that gold line. So what's the gold line? Gold line is the Person's pivot indicator. That's it. It's a moving average. And if the blue short-term pivot is above the 3-period pivot point moving average, and that's what that gold line represents, and I don't mind disclosing that because it's in every book I ever wrote. And by the way, we're going to pretty much go over this a little bit as a reminder, refresher at the seminar that's coming up here in Florida, December 2nd and 3rd. So if you're not familiar with the pivots, we're going to go through that as an indicator. So bottom line is, if you notice something really unique about the Person's pivot on the weekly basis in the Dow Jones Industrial Average, this particular week, when the week closed right here, we had a nice little buy setup based on our indicator, the PPS. But you'll notice what happened, just like over here. The market, when it closed on that Friday on October 14th, it projected the very next week to be a higher red and a higher green. That means it was giving a futuristic, just like it is over here, it's giving a futuristic targeted condition of the market. So that's why if you ever hear me say that Person's Pivot's one of the best leading price indicators, because it's telling you today what, or in this case, at the end of the week, what next week's condition outlook based on mathematics of the range of where price closes in relationship to its high and low. And it's targeting and giving you an idea what next week could be like, bullish or bearish. And so that's why I said back there in October, the Dow had flipped from being bearish, meaning lower, look at the blue below gold, and lower red than the prior time period, lower green than the previous time period, lower highs, lower lows. Those were all predicting a bearish market environment until that day. And since then, we've been in a higher high mode ever since, and that's in the Dow Jones. So bottom line, if you're a swing trader and you're looking at the market, then first and foremost, you're trading equities or index-based products. The weekly Person's Pivot point is for your trading for the week, and I'll leave you with this. Generally speaking, if the market is truly bullish, the blue line, which is the pivot in a bullish environment, the blue line, generally speaking, the blue line, generally speaking. And again, repeat after me. The blue line, generally speaking. And once again, the blue line, generally speaking. In a bullish environment, the pivot point will act as support. So to me, if the market's truly bullish, and you always hear me say this line, if you're day trading and the market's below the daily pivot or around the daily pivot and you're day trading, that's a dangerous spot. If the market's truly bullish, the market should be trading north above. And I always say north above, the daily pivot. So if you're day trading, you're looking for buy setups, but generally speaking, if the market's truly bullish, it'll be above the pivot point. So that would be whether if you're day trading, you're using a daily pivot. If you're swing trading, you use, generally speaking, the weekly pivot. And longer term analysis, we do have monthly and quarterly outlooks. And what I always try to tell people is simply this: institutions and long-term holders that are not looking to get rich quick. Day traders have little money and they're looking to get in and out. They're not going to hold, 1,000 shares of Apple for a month, right? So larger institutional type traders, they're not in it for the day trade and the swing trade. They try not to be, of course. So always look at your higher time frame analysis, because that's what the institutions are probably gearing towards. So in the Dow Jones Industrial Average, the quarterly pivot, if the market's truly bearish, the resistance holds and the pivot area acts as resistance. Ironically, we blew through as the weekly pivots were bullish. We just ripped right through quarterly. So I always like to look at the market in terms of highest time frame, and then I work my way down. And in this case, by the way, you have even despite the fact we are through the quarterly Person's Pivot, monthly in the Dow we're getting close to the Dow. Now, the actual resistance target is a target. It's not absolute. Generally, when a market gets near my pivot resistance target, I tend to look at other items like the condition of the rally. Is it up on strong volume? The breadth of the market. Is there good advanced decline readings? Since this is the Dow Jones Industrial Average, we do make and have a breadth indicator for the Dow. But I think that this particular topic is very critical and key, and I've already given out some of the secrets for successfully using Person's Pivots. One, it's a leading price indicator. At the end of the period, it tells you what the next time period's market condition will be. So the market's closed right now, and it's telling you tomorrow the market is bullish. So it's giving us and highlighting that tomorrow we have a higher high, higher low projection. And so if you're day trading and the market comes down first and then crosses back through pivot, then you would want to be on the long side, because if the market truly is bullish, it should be above pivot. If it opens below the pivot and trades below the pivot level, you're risking a market dynamic that could change on you. And if you want to be structurally on the right side of the market, you would wait till the market gets and gives you some kind of a good buy setup when it gets back above, like a 5-minute buy signal or a higher high or something, and the market gets back above the pivot. So as you can clearly see, if a market opens below pivot and trades back, if it's truly bearish, it should trade south of pivot, not north of pivot. So the pivot point to me and the person's pivot outlay are two critical areas of helping me to stay on the right side of the market. So whether it's the end of day pivot, daily pivots, or the weekly, those are good for both day trading and swing trading. So I thought we just rip right through that analysis. This is what we project in the room. This is the NASDAQ futures, that is. And this is a 60-minute chart. So looking at the weekly pivot, if we're going to be more bullish in the Qs or the NASDAQ, we would like to see the market close greater than an old swing high, greater than the pivot point itself, and we need volume to increase greater than this line in the sand, so to speak. If we get that, my target is, hey, we're going to go up to the pivot point resistance. Today was a good day. The market was up, but it didn't outperform relative to its price to pivot point location relative to the other markets. The S&P 500, by the way, it broke out above its weekly pivot. It was structurally a little bit more bullish price to pivot point relationship terms. Now, if you're wondering, well, why is that? Usually because, obviously technology stocks did not get behind the move, even though the fact it was a nice up day in the Qs, we really didn't get as much positivity out of other names. Like Amazon was like up 80 cents today. I mean, Apple was up a couple bucks and helped out, but a lot of your tech names didn't really follow through with today's general recovery. One of the main reasons is people are hesitant of buying into technology because of the overall Federal Reserve interest rate tightening, and it's bad for technology names. I think that's a generalization. Again, a lot of people are more bearish the market near term, and I'm less bearish near term. One of the main reasons I'm less bearish near term is the fact that the pivots were alluding to this week of walking into the week. By the way, if the pivot point remains bullish for all the indices, I want to be on some long positions. Since I'm not a real trusting person longer term of the market because of the Federal Reserve, I'm in a lot more option positions with time and distance than I am with overall individual stocks in this environment. But as you can see, we're longer than and have no shorts on yet. So why would that be? Because the weekly person's pivot was giving us a bullish bias in the market. All right, so many of you do not have Genesis, and you've heard that that pitch I just gave about how we got to Genesis. So let's fast forward. It was 2000, and I believe it was 2002, and this guy's sitting on a coffee table, and he's wearing a what are those kind of hats called? Whatever, funny little hat. People out in Scotland wear him playing golf, and he's wearing this really goofy hat. And I knew who the guy was, and I walk up to him. I go, "Hey, Tom, John Person, what's going on?" And he's like, "Well, I'm trying to set my laptop up here." He goes, "Our booth. It was in New York City, so it was February. It was 2002. It was a year after, of course, 9/11." And his booth of his company that he founded didn't get shipped out there. So we started to chat. I go, "Hey, I know this guy." He's like, "I know that guy. We know each other. He was the SIBO. I was the board of trade, blah, 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 yada, yada, yada. Oh, and you're speaking? Yeah. You may, I'm just a, poor kid technician type of guy, being humble." And I don't know. I think it was a few months later. I can't remember. We ran and hooked up again some other place. He's like, "Hey, you're that guy." Because at the trade show. I says, "Yeah." And so we started to chat. He's like, "Yeah, do you remember this guy?" Yeah. That guy passed away. Blah, 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 blah. We start, passing the hat around. And Tom's like, you know, um, I really like your work, man. We should put that over on our platform." And voila, the first thing to get done was person's pivots. That's pretty much, I think, my version of the story. Tom might have something else, but he says, "Yeah, we got to get your stuff on our platform." So, not a lot of people had their stuff on his platform, but he liked it so much, and we did a little dog and pony show. With Tom would do would say stuff like, we'd go to a trade show, and he says, I'm gonna tell you about a trade on options, and John's gonna be. And so we were both on stage, and we did that shtick for a little while. And I'd whip up something, and Tom would say, "I'm bullish," and I'd be like, "Yeah, but the weekly person's pivot's bearish, so you may not want to be too heavily involved in that position." And the audience loved it. It was good banter back and forth. Anyway, he goes, "Well, I own a brokerage firm and you don't." And I mean, ball busting 101. It was awesome stuff, right? Tom is Tom, and we're referring to Tom Sosnoff, by the way. So, was the founder of Thinkorswim. So many of you, as you know, we went off to found Tasty Trade, and then now with his ex-partner or partner Scott Sheridan, they founded Tastyworks. So, any event, Tom took that company a little bit different than putting the kitchen sink of technical analysis in the platform like Thinkorswim. So a lot of people still use Thinkorswim for darn good reasons. Um, and so, bottom line, if you're looking at trading a stock, you'll notice without anything, I just opened up the platform. First stock that comes up is a company called Marathon Digital. It's a cryptocurrency related item. And we have, oh yeah, look at this, weekly person's pivots. If the market's truly bullish, then the market will trade north of the pivot. If the market's truly bearish, the pivot point acts as resistance. So now many of you would say, "Well, John, you just showed us Genesis and there were 4 colors. Why are there only 3 on Thinkorswim?" The reason is because Tom didn't want that gold line. He goes, "That's too confusing. I just want it real simple. If the market's bearish, just give me the red for resistance and the green for support and show that it's lower low, lower high. That's what I want." You got it, Tom. So there it is. The 3-period pivot point moving average is not on Thinkorswim. I find it to be as efficient, more so at times, as a support resistance level, relative to, or rather than maybe the pivot point itself. But hey, it's better than nothing that it's there. Now, if you go down here and you go, "Okay, John, let's change that to, I don't know, what do you want to change it to? Apple, Google, Amazon, Salesforce, CRM." All right. So Salesforce CRM, it had a higher high last week. It had a higher green last week. Market hit resistance first, sold off. If the market's truly bullish, it should have stayed above pivot. So that means possibly trading range. And then as the market goes down, check out the indicator down below. The indicator down below is, again, if it breaks support, what's the condition of the breakdown? I always say, if it breaks support, what's the condition of the market? Define condition. Is there heavy volume? And how's the relative strength? There's 2 indicators that are on this chart, or actually 4. One is my PPS, which is the buy sell arrows. 2 is the person's pivots. 3, on balance volume, not my indicator, but I modified that. It's by Joe Granville. He created this some 30 years ago. And then finally, the one below for equities is the relative strength PMC indicator. This is my indicator, and all it is talking and shares with you as information is that there's 4 colors because there's 4 stages of the market. The market is weakening, red, weakening. The market's improving, fuchsia. The market's outperforming relative to the S&P 500, and then the market again starts to weaken. Dark blue is weakening, bright blue is improving, outperforming, red is lagging, and fuchsia is improving, excuse me. So there's 4 stages. So if I'm looking for the market to remain bullish, I want to make sure that volume doesn't make newer lows, and I want to make sure the relative strength doesn't get redder. So if I'm long and the market's not working in my favor, then I need to reevaluate the trade. So if person's pivot's still defining a bullish outlook, I'm going to stay with the trade. And in this case, I do have an open position on Salesforce, their January call options. They're out of the money. It's not working as great as I thought because the market went from approximately last week when we bought into it. It was around the 155.6 area. It was above pivot the next day. this happened to us. So because when the market opened lower, there was not a lot of volume, I stuck with the trade and the options because they expire in January. So we're almost back in the price action. The condition of the market is still bullish because, as you can see, the green is higher than the prior green and the red is higher than the prior week. So it's even with the sell-off last week, coming in for this week, it was still giving us a projected higher high and higher low. So when you ask, well, when did that calculate that, John? On the close on Friday. John, if there's not enough room at the end of my screen, how do I get information and set up Thinkorswim to give me the analysis for the next week? And that is a great question. I'm glad I asked it for you. If you go right over here and you go to the arrows and you right click, or excuse me, left click on those arrows, you see where it says change right expression expansion settings. Click on it. I have expansionary. Most people might have a default of 0. So if we change that, if this is a 1-hour chart and it's Wednesday or Tuesday, excuse me, and tomorrow, Wednesday, you got how many hours in open outcry? 6.5. And then you got Friday, another 6.5. So to figure out what Monday might give us, we need at least 13 at least. So I'm going to go 14 and change that expression to 14. I'm going to hit apply and okay. Apparently, we need more than 14. Oh, because it I don't know why. Let's trade and go back to, I thought I changed that, and 14. 14 is not good enough. Oh, we needed at least 15. That's right. 14, not 115, just 15. So if I change it to 15, hit apply and okay, there we go. So bottom line, if this is the close on Friday, it will give you, because it's expanding far out in time, it's telling me if Salesforce closes here on Friday, ooh, no bueno. It's giving me a lower high and a lower low. Here's the pivot support way down there. It's off so far down off the chart. It's actually projecting a bearish week for next week. So if Salesforce can't get its get its price in gear quickly, and if volume, which looks more appealing to me because right now on balance volume is higher than where the stock price was up there, the relative strength is improving as well. So it has all the makings to get better. It just has to get better. And if it doesn't get better and the outlook changes for next week from bullish to bearish, I'm likely to get out of my trade or in a wide bull call spread, roll down my position. So that would be how I effectively use person's pivots to give me inclination into the future based on the price and not my opinion and not some other analyst on TV. And that's based on pure price action. Okay. Price action is person's pivots based on a mathematical model. And then I look at the stock and see, does anyone else feel comfortable being long this stock besides John Person? If so, then volume trend should be up. And if it's still doing well relative to the overall market, then the relative strength, and that's what this tool is, PMC, it's just saying, listen, Salesforce is starting to improve relative to the S&P 500. It's not your RSI Wells Wilder overbought, oversold indicator. It's a relative strength tool. These are the 4 tools that consistently I only use. I don't have a new indicator du jour. I don't sell the indicators. We have a package for what I do on TradeStation, on Genesis. But to answer the question, do I have a new indicator? If what I created isn't broken and still works after all of this time through the pandemic, the hairy and wild ass markets that we had, why would I need anything else? So to me, if anything that I've ever had before that I've put out, if it doesn't work, well, then maybe I need to move on and get a new indicator. But I just think that in my mind, the person's pivot based on math is a dynamic tool and works so efficiently. So whether it's the Spider, Salesforce, Apple, for example, bottom line, the market has been projecting on a one, for at least week to week, it's in a trading range. You got a higher high here, lower low there. It's kind of bullish there, and the market's sideways. I mean, the condition of the market, nobody really believes in selling or buying the market. Apple's not really going very far. That's what the volume's telling you. No one's really buying into this. So again, next week, if Apple between tomorrow and Friday can't get some mojo going and rally and break out with some decent volume, right? I mean, lead this market up with good volume participation. Um, the pivots, even right now, are projecting a bearish week after Thanksgiving. I just thought I'd throw that out there. How do you understand to find that? Real simple. Put up a chart. Um, and if you go up to studies, you can go to add a study, find my name, make sure there's two other Johns, make three of us, make sure you get John Persons indicators, go to Persons pivots, click on it. Now here's the problem. Watch this. If you have a daily chart set up already, it's going to have a lot of these little dots. And most people make this mistake going, oh, I got the wrong indicator or something's broken and that looks like garbage and I don't want anything to do with it. Thinkorswim defaults when you hit Persons pivots to daily pivots. Now, if I change the time frame from a day to 5 minutes, oh, look, the pivots are there. I have two series of pivot points. I still have, or three, excuse me, for God's sakes. I got weekly, I got quarterly, and I got daily. So I didn't delete the other ones just to save time. So I just wanted to explain. Go up to studies, go to edit the study, and if you don't want the quarterly, hit the, we'll get rid of it for right now. I need not two different days. Obviously, I had days there, and we don't need the weekly. We're just going to do this for training purposes only, and hit OK. All right, so now I have daily Persons pivots up for Apple. We have, I know some of you might have been interested in trading a small little company called Tesla. So Tesla, if the market is truly bullish, you can even see our work. We've done this before. If the market is going to bounce off of a pivot, it better clear the pivot if it's truly bullish. This was our setup for today. Guys, if you want to buy pivot or if you want to buy Tesla as a day trade, you need the market to close greater than the swing high and get above the daily pivot. I've already given that trade setup in this video or in this class, right? So I'm just throwing out to you how do I utilize and do my own work. I kind of practice what I preach. What I was setting up with these lines was simply this. There's a gap up in the market. We hit a longer term quarterly support and monthly support around 166. Might find some buyers down here. Odds are with that type of end of day volume, maybe the market gaps higher a little bit tomorrow. But if the market's truly bullish, it will be above tomorrow's pivot. All right. We were looking at a day trade today. Instead of buying that high, I said, don't buy until the market closes and trades back above the pivot. And if it does, we should see a rally. And my extension for the day would be right up around that zone. The trade never happened. And what happened? Tesla went sideways all day, chopped around. Maybe it could have picked something up, but no, until the market gets back above pivot, that's as a day trader. If you're bullish and looking for buys, you're better off to wait for the market to get back above the daily pivot. In a bullish environment, the daily pivot will act as support. And if the market's truly bullish, it trades north of the pivot. Otherwise, you're in jeopardy. Now, I will leave you with this thought. If you buy above pivot and wait for it for confirmation, again, if the low is here and you're finally buying up here, you're giving a huge amount of movement for confirmation, which means the probability of profitability is increased, but the amount of profit is decreased. So it's a toss up with my work and the way I trade to say, do you want more consistency in your trades? Do you want higher probability of success? Because at times that comes with lower profitability. So if you want more gamble type trades, knock yourself out, but and figure it out. But if the market is going to be bullish, we should be trading north of the pivots And if the market's truly bearish, it trades south of the pivots, meaning below. And how can we validate that statement? Let's look as one last point before we conclude tonight. Always look to see if a stock or a product you're trading is respecting that simple rule. If the market's bearish, it trades below the pivot point, the fuchsia. If the market's bullish, it trades above the pivot. With this particular mood, this market fell in a kind of a trading range for quite some time as we were back in October. And when at the end of the day, it was supposed to be bullish and it just opened lower, never saw the light of day, closed ugly. And ever since then, bearish, 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 bearish. All right. Went north of pivot a couple days, had a good uptick into resistance, traded back, pivot, 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 and now here we are. So if you are looking as a trader, and these are again, this is the daily person's pivots. All right. So as a day trader, once again, if you're looking to be a buyer, you ain't buying until the market gets back above pivot. If you're a seller, you're looking to stay short on any rally as long as the market stays below the pivot point. And that's general gist of how to use the person's pivots, how to get the right expansion, and the different time frames. The key takeaway here is when you load your chart and you add a study, it's going to default straight up with the daily pivot. So if you have a daily chart with daily pivot points, it's going to look like, I don't know what that is. It's like, I don't know. It's an artwork from Jefferson Airplane album cover, maybe. I don't know. I don't know what this says to me. It's you're using the same time frame, a daily with a daily pivot. If you want, just go over to either drop your time frame to an intraday basis, like 5 or 15 for day trading, and that's the right setup for daily pivots, end of day pivots, or for intraday trading. So a daily pivot that starts at the beginning of the day and ends at the end of the day is for intraday day trading. If you're looking at swing trading or longer term trading, use your weekly and monthlies. To change the time frame, hit study, go to edit study, go to your day, go to the little settings wheel, and then where it says time frame, from day, change that over to either week, month, option expiration, and quarterly. All right. So that's how you would change from what your outlook is. Can you put multiple time frames on a chart? Yes, and I do. Why? Because I'm looking for a specific confluence of resistance. Even in my own newsletter, I share that. I even wrote it down, by the way. So in case you didn't catch that, it says, oh, and I don't mean to be facetious here, but it's, by the way, mildly higher target for the SPY and it coinciding near quarterly pivot resistance. So we call that a confluence. The more resistance in different time frames that you have that coincide near each other, uh, that adds to the stronger the potential for resistance. So if the market rallies and we're trading near 408, 407, somewhere up there, 405, and you decide to finally get long the market, you're buying near a resistance level. Market could go to 409, might go to 410 for a nanosecond, but the odds of you buying and making money at a resistance level is slim. It's really a poor choice. So I tend to take profits as we get closer to a pivot resistance level. But when we have a confluence like higher time frame, in this case, quarterly and weekly, I tend to say, hey, I would like to see, I look at some chart action. So let's double check something here real quick. SPY. I look at chart action. So let's take a look at the chart action we've outlaid. Here's a daily chart. What a coincidence. Weekly pivot and the quarterly pivot point is targeting at a zone here where way back in time, again in August, there was a gap in the market. And if we fill that gap at quarterly and weekly person's pivots, and there's no volume to really support a further structured higher move, I'm more likely not to be long anymore. Just throwing that out there. All right. So that's, we have this little channeling here. That's why that dash line is there to illustrate there was a gap in the market. If the market can't rally, and markets can rally on thin volume, they're just, unless volume comes in to support the move, those rallies are unsustainable. And there's a coincident value of multiple resistance at old chart points that if we fill that gap, I'm less likely to be as bullish in the market at that juncture. And that's my 2 cents right there. And I hope that was a good way of going through how do we use person's pivots on multiple time frames. How do you get them lined up on your charts? How do you get multiple different time frames on your chart, and what the time frames are best to use for in the indicator? And why is it considered a leading indicator? Because it'll tell me at the close today what tomorrow, based on a mathematical formula, what the weight of the market is, whether that's bullish or bearish. I hope everyone had a great week, a good, well, less stressful year. I'm thinking with these indicators, it certainly gives us great tools and guidance to go through. And with that said, I want to wish everyone a wonderful Thanksgiving. If you're going to go out and play rugby in the morning on Thanksgiving Day, like some buddies I know do, try not to get too bruised up. If you're going to stay in and watch the World Cup, that's fantastic. Here in America, we call it soccer. If you say, gee, are you going to enjoy the football game? I'm going to say, I think Thanksgiving, we all watched Detroit Lions play because that's the Thanksgiving thing. So we need to be careful how you present yourself in saying, are you watching Thanksgiving entertainment? So anyway, with that said, I really wish everyone has a great Thanksgiving. God bless. And for those that are in our live trading room, we'll see you tomorrow. And for those that want further information on our seminar, because we are providing a seminar at the end, or actually, you know what? The seminar is up pretty soon. It's just about in less than 2 weeks, December 2nd and 3rd here. There's a link if you want to see that. That's where you get that. Other than that, everybody, I think we covered the person's pivots. You see my charts. I've already got them overlaid. It's what I use. I find them to be immeasurably helpful. And with that said, we'll see you in the next PUG meeting every month, right back here. We do what's called a customer appreciation. PUG stands for Persons User Group, PUG. If you are using my indicators and you're with a platform like Thinkorswim, Genesis, TradeStation, MarketView, any one of the products, HGSI. Oh my gosh, how do I not mention HGSI? If you're using those products, I generally will answer questions on how to set you up and how my indicators, how I use them efficiently in this environment. Thanks, everybody. Happy holidays, and we'll see you next month, or for those in the live trading room tomorrow. That concludes our time together. This was a fast one. So thanks to Darren. Good question. I hope you got the right answers. See you, everybody.